Thank you for tuning into our January Fundstrat US Large Cap Granny Shots ETF webinar. We just completed our first week of January 2025, and I think while it's felt like it's been turbulent, it's actually a good omen for the year. And I thought in today's webinar, I would give you an update on some thoughts around themes and the importance of being patient. The Fundstrat Granny Shots ETF is led by a team of 4 people, as I've listed here. I am the Chief Investment Officer of Fundstrat Capital and the portfolio manager for this fund. I'm co-managing this with Ken Shen, who is the portfolio manager as well. He's also known as Tireless Ken. Steve Quinn is head of asset management, and Carrie Presley is the ETF client product specialist. There is a lot more information available on our fact sheet, which you can obtain from our website, grannyshots.com. And there's also a lot of information there about fund holdings and performance, etc. Now, I just want to start by reminding you what a granny shot is. It's named after an unconventional form of shooting a free throw in basketball. It was popularized by Rick Barry, NBA Hall of Famer, who made 90% of his shots. He's the one on the right. Traditional free throws have a much lower success rate, around 50%. And so what we're trying to achieve in terms of stock picking is a Rick Barry style granny shot. The way we achieve this is, first, we identify the most important themes of markets. So it's a research-driven process. We select the best stocks, the strongest stocks within those themes, and are set to really leverage those gains. And the result of this is really buying the strongest stocks and the strongest themes, very much like Rick Barry. So I thought I'd cover some of these themes and talk to you about where they stand today. First, our fundamental theme is millennial strategy, focusing on the importance and drivers of millennials, the global shortage of labor and the rise of AI automation that stems from that, the growing importance of both energy and cybersecurity, and finally, the fact that the Fed is easing financial conditions, and that is positive for markets. We also have shorter-term themes that we adjust every quarter, like style tilt, seasonality, and the PMI recovery. One thing that we need to start with is talking about the idea of being long-term greedy. And this is first popularized or first stated by Gus Levy, a Goldman Sachs legendary partner from the late 60s and 70s, who says that Goldman Sachs, they're greedy, but they're long-term greedy. And that means that they're focused on making money in the long term. And that's what we want to do as we think about investments. Take a look at consumer adoption from the 1900s all the way to the 1960s. This is data from Our World in Data. But whether you look at electric power, refrigeration, automobiles, radio, washing machines, or color TVs, each of them had their own exponential growth cycle and different companies that were capitalizing on that. Now, they could have been device makers, or there's services that stem from it, or they made the infrastructure. But you can see that these are long-tailed opportunities. And even over the, let's say, computer era, so from the 80s to 90s, you can see the adoption of computers, mobile phones, internet, smartphones, social media, or even commerce buying like Amazon Prime, all had multi-decade opportunities. And again, these are the leading companies. So what do we think are the big opportunities in 2025? Well, first one that we've talked about for a long time is Bitcoin and digital assets. And we think that we're still really in the early stages there. Of course, cybersecurity is early in its earliest days, as well as AI and global labor shortage. Some things that we're going to increasingly talk about are things like space and interplanetary travel, as well as wellness and GLP-1 to deal with obesity. And finally, the importance of quantum computing. So you can see there's a lot of ways to be positioned for these long-term drivers, but it is important to be long-term greedy as you think about these. Now, in order to find the strongest stocks, not only do we look at the themes that I've mentioned, but we want to find stocks that are appearing in more than one theme, and that's what makes them even stronger. So that's names like Meta, Google, Garmin, Ranger, Caterpillar, etc., which appear in multiple themes. And that's what really makes a granny shot.
All right. Thanks, Tom. Happy New Year, everyone. Hope you and your family had a great holiday season. And welcome back to our second Fundstrat Capital GRNY monthly webinar. Again, my name is Ken Xuan, the co-portfolio manager of the Fundstrat GRNY's US large cap ETF ticker GRNY. So in my today's webinar, I do want to recap the recent performance with you. So bear me with one moment. Let me share my screen. By the way, all the performance data I'm referencing today is as of Friday, January 3rd. And as you can see here, since the end of November until again Jan 3rd, our GRNY ETF, the GRNY, down by 2.3%. During the same period, the S&P 500 index, our benchmark, is down by 1.4%. So relative speaking, GRNY trail the benchmark S&P 500 by around 90 bips. But as you can see from the time series, the majority of the underperformance really starting from the second half of December, and it's really start from the Fed made a hawkish cut when the market start to turn around. So now the question is, what we're trying to figure out is what causing this underperformance. And essentially, we're trying to ask ourselves, does this change our investment thesis? So let's first looking at, the traditional return attribution by looking at the sector allocation versus stock selection. First of all, we're using the Bloomberg function. As you can see, our sector allocation actually contribute negative 66 bips of the underperformance. In other words, 66 out of 90 is from sector allocation, so it's almost around 80% of underperformance. And by looking at sector, as you can see, it's really from industrial. Industry itself contribute 120 bips of underperformance from the sector allocation perspective. And as you might recall that when we launched our ETF, industrial has been actually the largest sector allocation. So which I think actually makes sense when the Fed started making the hawkish cut, and when the market started to turn risk off, industrial as a cyclical sectors get hit the most. Then the other side of the return attribution, the stock selection, our stock selection with industrial sector actually was fine. It's down. It's trailed by around 6 bips. But as you can see, within 5 sector, our stock selection actually better than the sector index, discretionary, healthcare, real estate, financials, and comm services. For energy, material, utility, because we don't have any allocation in those three sectors, that therefore is showing 0 here. But of course, what caught my eye has been, the tech knowledge sector, the stock selection within tech sector contributes 68 bips of the underperformance. So if we're looking at the tech sectors, it's really has been 3 stocks, Oracle, which Tom has talked about that in the wiki video, has been due to the decline has due to the earnings. And AMD, well, has been weak for almost a year. Now we're at around the 52-week low. But AMD has been, the data center business has been growing strongly. And I think for the AI, it's still pretty early to call the winner or losers. So I think AMD still, from a long-term perspective, doesn't really change our thesis. And of course, Palo Alto Network, the stock has been up since the decline in last spring, but recently since the Fed cut by the mid of December, at the mid of December, it's the stock actually under a lot of pressure. And of course, the recent weakness, we will definitely take that into account into our next rebalance. We'll feed that into our momentum factors. And so far, I think still our investment thesis hasn't really changed yet. So combine both sector allocation and the stock selection. As you can see, well, industrial is still like really one of the biggest driver of the underperformance. And you might want to ask why we have so many industrial names in our portfolio. Just a reminder that our Fundstrat GRNY US large cap ETF has 7 underlying themes. And for a stock to be included into the final holdings, it has to be at least in the 2 of the 7 themes. And the reason why we have so many industrial is because, first of all, it's really from the short-term themes. And first of all, style two, we are recommending that cyclical growth and pure growth. And, the cyclical growth part has a lot of industrial exposure. And from the seasonality theme, we, of the 8 industry we recommend, because of the seasonality rationale, 3 of them are actually from industrial sectors. And finally, PMI recovery, it's looking at the value stocks within the technical sectors. And PMI itself, linked to manufacturing, which is highly tied to the industrial sectors. That I think that this is the reason why we have so many industrial holding in our portfolios as of now. And the other way to looking at the performance has been using the theme I was just talking about. And on the left, we're showing the theme performance, the short-term theme performance. On the right, we're showing the longer-term theme performance. And as you can see, on the left, all our 3 short-term theme actually trail the S&P 500 benchmark index. Especially the PMI recovery has really trailed by almost like more than 500 bips. But our long-term theme actually performed pretty well. Millennials, global labor supplier, and energy cybersecurity actually outperformed the benchmark S&P index, especially the millennial actually outperformed significantly. Well, and easing financial condition has been trailed slightly, but as you can see from both this theme performance and also the sector return attribution, in industrial, or even say the PMI recovery, is really hurting our portfolio performance. So now the question is PMI really going to recover? Well, the future is unknown. We don't know what's going to happen. We will never be 100% sure, but PMI has been really under the boom and bust level of 50 for like almost the entire last, or even more than 2 years. But we do see recently the PMI has shown some recovery. And even if you look at the underlying components, I think one of the 2 of the most important one, the new orders and the production, which new order will tend to be the leading indicator of the PMI, has recovered well above 50. It's actually one of the highest levels over the past 2 years. And also production, which is more like concurrent to the manufacturing activity, has recovered above 50 in the last release. So and one of the reasons is, we think the strong GDP, the disconnection between a strong GDP and the weak PMI has really been to the Fed policy. And as now we're entering the Fed cutting cycle, plus, the incoming administration is known for the pro-business agenda. So we do believe that PMI should recover above 50 soon. So in other words, our investment thesis haven't changed. All right, that's all from my part. And now I'll pass into our head of asset management, Steve Coyne, to give you guys some update about our fund launch. Thanks.
Happy New Year, everybody. It's exciting to be back. Hope everyone has a healthy and prosperous 2025. Wanted to take just a few minutes to talk about the GRNY ETF and the progress since launch and in the last month. First on the slide here, I'd just like to look at market cap and flows for a moment. So as a reminder, market cap is the shares outstanding times the price of the GRNY ETF each day. And here I'm looking at last month through last Friday at the top of the chart. And it's encouraging what you see here, and especially when you combine market cap looking at flows. So there were 24 trading days over the time period we're observing here. And if you look at the second window down, you can see that in 20 out of those 24 trading days, we had positive net flows. And also, obviously, we had no negative flows, which is great to see. So appreciate all the support from our investors there. I did go back and take a look at all of the ETFs that were launched in 2024. So using Bloomberg's data, there were 720 launches of ETFs in 2024, and that's across all asset classes, all styles, and all structures. And if we look at all of their flows for 2024, you see here I ranked them, and the Granny Shot ETF actually ranks 21st. Now that's despite the fact that it didn't launch until November 7th of 2024. So this is very exciting. And some of you may look at this and notice that there are a lot of products at the top of this list that had an inception date that was much earlier in the year, and also look at the asset class. And so what I'll say is, if we adjust this, and we adjust this for all of the crypto related and crypto derivative related products, you would actually see that the Granny Shot ETF would rank ninth in 2024 flows among all those products, those 720 products launched in 2024. Taking a moment to talk about liquidity, always a very important subject. I'd be remiss if I didn't remind our investors, we always encourage you, whenever you're trading, to use the limit order. We're happy to help you with that. But if you look at November through last Friday, the daily average shares traded in the secondary market in the Granny ETF was approximately 1.3 million shares. I do really like to share the implied liquidity analysis from Bloomberg, which shows that there should be ample liquidity in the Granny Shot ETF. They estimate this based off of the liquidity of the underlying holdings, where their estimate is there should be about 73.5 million shares available each day, which equates to just under $1.5 billion of liquidity each day. Below here, what I did is I took all the largest trades reported by Bloomberg over the last month. And so you can see there are some decent sized blocks that have been traded in the Granny Shot ETF. And you can also see the corresponding dates of these trades. I think what this also implies is that we're seeing some evolution of the investor base and expansion of the investor base, where we're now seeing some family offices, advisors, and independent RIAs that are starting to invest and participate in the ETF, which is great to see. In terms of access to Granny Shots by platform, as you can see here, we're available on most of the self-directed trading platforms. From an advisory platform, we are on Stifel's platform. I do want to mention, if you're an advisor and you're listening today and you'd like to see us get approved on your platform, please feel free to reach out to us. We are working with advisors on other platforms to work with their family office, their home office, excuse me, to get access to the platform, and we'd love to hear from you. Also, in terms of feedback and future launches, we've had a lot of feedback and a lot of suggestions for future launches. We'd love to hear from you. We do keep future product launch plans pretty close to the vest, so to speak, but we do hear you, and so we welcome the feedback. In terms of upcoming events, we did want to mention Tom is going to be the keynote speaker at the CFA Society event in Jacksonville later this month. We also will be participating in Future Proof down in Miami in March. So we hope to see as many of you as possible while we're there. But we did also want to make mention, we are making plans to visit certain areas. So if you're listening, you're an advisor, you'd like to make sure that we reach out to you when we are in your area, please use the inquiry@fundstratcapital.com email address.
All right. Thank you, Tom, Ken, and Steve. Hello, my name is Carrie Presley, and I hope you all are having a great start to the new year. So we have quite a few questions, both administrative around the fund, such as dividends and the rebalance, and we have questions about the Granny strategy itself. Before we dive in, many of the fund-related questions that we've received can be clarified in detail in the prospectus and investor deck. both found on our website at grannyshots.com. So take a look. We want to make sure you're equipped with the latest and most complete resources. And with that, let's dive into the Q&A. Our first question: thank you, Tom and team, for the weekly videos and updates on Granny. I appreciate the clear communication. How do you make sure others don't outrun or copy Granny, given you are so transparent with the strategy?
Our process for selecting Granny shots is transparent, and I think it's very important because we want investors to understand what they're getting when they buy the Granny Shots ETF. And you're wondering, did someone actually then anticipate the moves we're making? I don't think so, because when we change our thematic views, that's something we're only going to update first for any Granny Shot investor, and we'll do it through a webinar. Similarly, when it comes to stock selection and finding the strongest stocks, we actually have a multi-step process to find the strongest stocks. So I don't think that's something that someone can front run from us. But thanks for your question.
All right, this is timely as we are nearing a quarterly rebalance. I know the Granny ETF seeks to rebalance quarterly, but is there a rebalancing schedule available for the Granny ETF?
Yeah, I'll take the question regarding rebalances. So, as everyone knows, we launched the product in November. So, what that means is we will be on a November, February, May, and August timeframe for rebalances. We did say in the prospectus that we will rebalance on a quarterly basis back to equal weight. There's no specific date for the rebalance, but we will be holding to that November, February, May, and August schedule.
All right, this question is for Tom. Tom, I know you often comment about quantum computing and its effects on the future. Does quantum computing fit in your current Granny Shot themes? Or could it be a potential future theme?
I think quantum computing is important. It's really a log function or a huge step up in the computing and the way of computing and solving some really difficult problems. So I would say it's the earliest days. I know Jensen Huang earlier this week mentioned that he thinks it's 15 to 20 years away before we start to see any applications or use cases for quantum. I don't think anybody really knows the true timeline. It could be 15 months, it could be 15 years. But as we know, technology sometimes looks like it's not making progress and then it happens all at once. That's exactly what happened with AI, for instance. We've been talking about AI within Granny Shots since 2018 because of this growing labor shortage, which we saw demographically with a lot of visibility. But even as recently as 2 years ago, okay, so let's go back to 2023, there were a lot of people dismissing AI, saying that they didn't think there was much potential. And look what's happened in the last 2 years. So thanks for your question.
Right, this is a very common question, and it speaks to our community of non-US investors. As a UK-based investor, I'm facing challenges investing in the Granny ETF. Do you have advice for accessing US-listed ETFs or alternative ways to access Granny for international investors?
Sure, I'll take the question related to UK investors and accessing the Granny Shot ETF. So, for retail investors in the the UK does require issuers to respond to a key information document, a KID. Uh, we are unable to do so. What most or many ETF issuers from the US will do is at some point in their life cycle, they may offer the same strategy and usage structure. So we're very aware of the usage structure. It does make it a lot easier for retail investors in certain jurisdictions to access the strategy. We don't have any announcement today about a future launch of a UCITS, but it is something we are aware of, and we will contemplate for the future.
All right, the next question is for Ken. There are quite a few acronyms in this question, so bear with me. Why do you use ISM Manufacturing PMI instead of Services PMI? Is US a more service-oriented economy? Also, why use ISM PMIs instead of S&P PMIs?
So thanks again for the question. I think it's actually a great question. Yes, U.S. economy or even the employment is definitely more service sector orientated. But historically, from stock market perspective, that the stock market and even the earnings are more correlated to the manufacturing PMI. I think one of the reasons is because the manufacturing PMI is more cyclical, while the service PMI or even the service sector are more, it's more like stickier. So in other words, manufacturing PMI is more sensitive to the macro policy, the Fed policy, the government policy, and even the global trade condition. That's why when we do our research, especially stock market, like we pay more attention to the manufacturing PMI. And the second question regarding why we're using ISM instead of S&P Global, well, it's actually a great question. And both of them are very important indicator for the market and for the macroeconomics. But there are some difference that the ISM PMI it's tend to focusing on more like the larger companies, while the S&P Global PMI is more for the smaller company. That's one of the key difference. And also, S&P Global PMI, I think it does better job to measuring the global PMI. Like if I'm going to comparing the PMI between China and US and UK and say Germany, S&P Global PMI would be better matrix because I think they use the standardized way to calculate the PMI across different countries. And while if we're just looking at the US or US stock market, the ISM PMI does a better job to capture that trend. But they are highly similar. And another important reason we're using ISM PMI is as ISM PMI has a long history of data, so give us better it just help us better in analyzing the correlations. Hope that helps. Thank you.
All right, this question is for Tom. Tom, I know you've addressed this in your previous weekly update video, but we've had such an overwhelming number of questions. It's definitely worth revisiting. Tom, in the future, could you foresee GRNY ever having Bitcoin exposure through MicroStrategy or another holding?
Bitcoin's pretty important. I know that at Fundstrat and FS Insight, we've been recommending to those clients to have it somewhere at least 2% exposure to Bitcoin. But increasingly, it looks like even 5%, especially if the US government does take a friendly regulatory approach to Bitcoin. So we know there's a lot of potential for Bitcoin's price appreciation and its potential benefits to not only keeping the dollar strong, but really having a positive impact on the security of the financial infrastructure. So with that in context, it does make sense for us to look for ways to have exposure to Bitcoin in the GRNY Shots ETF. And we addressed this in a video recently, but the fact that MicroStrategy is now being included in the NASDAQ 100 vastly increases the ability for us to include stocks with direct Bitcoin exposure.
All right. Thank you, Tom, Ken, and Steve. And thank you all for taking time out of your busy day to join us. Before we wrap, we have two quick reminders. One, join the GRNY community to stay updated on the GRNY Shots ETF, including monthly webinar invites and Tom Lee's weekly update videos. Please visit granyshots.com and join our email list. I also highly encourage you to follow Fundstrat Capital on X, LinkedIn, and YouTube. Secondly, we want to hear from you. If you have questions or feedback, you can reach us in several ways. You can visit granyshots.com and submit your comments or questions via contact form. You can email us at inquiry@fundstratcapital.com. And you can always drop a comment on any Fundstrat Capital social media channel, and we are reviewing those comments there as well. With that, we will see you all in February after the rebalance for another Fundstrat GRNY Shots ETF monthly update. I hope you all have a great afternoon. Thank you.